Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
So, hi guys, welcome again to the channel. For those of you who are new, welcome to the Market Profile channel. This is where we talk about everything to do with market profile. So, I'm going to walk you through step by step, as always, a couple of the trades that I've looked at, I've done, and I'm also going to take you through obviously some of the logic behind it, and I'm going to give you some insights on the best way that you can use market profile in your trading. Now, we do know that 90% of institutional firms out there use market profile as their preferred way to visualize the market. Now remember guys, we're not talking here about any kind of special systems. What we're talking about here is a way to visualize the market. We look at the market on a horizontal plane, which allows us to make decisions faster, more efficiently, and we can see the nuances of the actual market or order flow. Something you can't do with a traditional candlestick. Now, granted, of course, there are points that you might need a traditional candlestick chart in order to be able to, say for example, look at structure, so you can determine where the macro picture is. I cover this a lot in some of my programs that I have available on my course website, where I cover everything to do with market profile and some of the nuances you need to have a complete trading system. Now, of course, for those of you who don't know me, I'm Greedy Trader. I've been running this channel since 2014, and largely I have been a trader for over a decade. Not only that, I was an institutional trader and broker and analyst. So pretty much I've done everything to do in the business. I've pretty much traded everything, whether it's a derivative. I've traded everything from ETFs on the equity side. I've traded bonds, bond futures, of course. So I've traded everything. So there's not a market that moves that I haven't looked at or traded. And what I've eventually settled on is the idea that you need to diversify a portfolio. I have a very interesting philosophy that you need a stable income from trading, which means that you're going to have to look at trading from a holistic point of view. So I sell option premium, which brings a more stable income return. I also trade leveraged assets, as you can see, currencies, crude oil, and this obviously allows me to enhance that income as well. So there's a lot of hedging from that point of view, and obviously the way I interact with the markets obviously allows me to hedge myself in different directions. That's the general idea. That's the point about this. We believe that we should be making trading real, right? So in other words, all of that fluffy stuff, Lamborghinis, billionaire traders, etc., none of that makes sense for the average person, because once again, it takes money to make money. If you don't already know that, then you shouldn't be in this business, because the reality is that there are a lot of people out there, a lot of trust fund babies who found a way to get involved in trading because they have endless amount of capital. But of course, if you're an ordinary person, you're not a trust fund baby. Even if you have the greatest job in the world, ultimately, and you want to get into trading, you're going to find that you might not be able to deploy all the capital that you want for it to make sense. And of course, if you deploy too much capital, you're likely going to blow it. So you have to find that middle ground where you can be profitable with smaller accounts. And that's why we teach traders how to trade smaller accounts and also make it profitable for themselves. So that's the general idea of why we have the channel and what you expect to get here. All right, so I'm not going to waste any more time. I did intend for this video to be a very short video because, again, I want to be able to show you guys a couple of things, so I'm not going to waste time with all the fancy stuff. But if you're new to the channel, of course, this is essential. However, if you're not new to the channel, then this is just another video. Okay, so Starting with the Aussie dollar, what did we talk about on the last video? We did talk about the fact that we had a gap in value and this inefficiency needs to get taken care of. It's been taking a while, we're kind of getting there, but we need to see a complete gap fill. So I was incredibly bullish in the Aussie because of that. So even as we were pushing to the downside, I was like, look, you got to buy the dip. So it seems like the theory is playing out. We also have another gap in value to the downside, so we expect the Aussies to get pretty volatile. So we are going to be looking at potential plays as this thing unwinds. This is a weekly profile, guys, so we are looking at the longer term picture. And of course, I'm going to post some of my trades up in a minute that we looked at, because a lot of the stuff I've done this week has been relatively swing. I haven't looked at the longer term because we flattened out a lot of our positions about 2 weeks ago. We did some day trading stuff. A lot of the stuff I do here now is for the channel, so obviously you guys can see how things work, how I do things, and whether that is really going to gel with you. Crude oil, we're still extremely bullish on this one. Again, as we traded lower, I was saying to you guys that, look, we've got all this bid activity, right? Responsive buyer, P period. The reality is that any pullbacks should have been a buy the dip. This is a longer term observation of the market. You can see the competitive buyers sitting here. I expect these highs to break at some point. We're really showing that intent, and we have to start considering prices to the upside. 75, 77. No doubt there will be a media narrative that is going to support this idea, likely something in Ukraine and Russia. So just expect something to happen, and this would already be reflected in the markets, especially in the oil price. So be prepared. S&P 500, again, we're building up here now. Gap in value, I would expect a dip to the downside. I think that has already been played out in the option market. You know, I was selling premium on Shopify this week, and oh boy, it's just ripping away. So again, with our option trades, we tend to manage our positions because obviously we sell options. We have to be very cautious on that. But I've also got some short puts on AMD, so we'll see how that goes. Those are far out calendars, so we'll keep an eye on that. But largely, I do think we're going to probably see some weakness in the S&P. We do have this gap, and as you can tell, historically, gaps are never left unchecked. So I would expect definitely a downside drop. However, we're structurally bullish on the S&P. We do have some bids sitting down here. So even if we do get that drop, I would expect that you'd want to consider buying the dip, right? So we're probably going to look at grabbing anything between 4210, 4229. That seems like typical range. Even if we chew through that, it's unlikely we're going to take out last week's lows. So I'm still bullish, right? So it's just a question of how we're going to play this. If we do make our way to the upside, I'd expect it's going to get incredibly volatile. There will be a lot of shorting on the rallies. So it's going to be messy, guys. But we've just taken the high, and we tend to get a lot of liquidity up here. So my idea is that we're going to get a brief stop hunt, and we're going to start tracking back lower. So not really, I don't have a lot of faith in the S&P at the moment, running towards the end of the week. So again, I wouldn't be surprised if we start to tank a lot lower. So it's going to be hell for our short put positions. Gold, again, we can see there was a massive rejection of this value. We've been kind of bouncing here. We've kind of done a half value trade. I'm structurally bullish on gold, but I'm also aware of the massive downside risk to fill the gap. Again, that's like 1800 an ounce, so I'll be very careful. We're seeing a lot of sellers coming in. We can see those offer stacks now forming in a consolidation, and we're now trading lower to the downside. So if we can't get a recovery next week, then I would 100%, so as you can see, we've got lower highs all the way down through the week. So this is very bearish at the moment, even for the short term. So again, I'll look at maybe people grabbing this as we drive into 1900. A lot of institutional stops will be below 1900. So if the 1900 level goes, that's pretty much it in a nutshell. Again, guys, we have a free Discord channel. So again, you'll see a lot of my ideas, some of the trades we look at, how I look at them, and how to do them. What I'm showing you here is just an idea of how you can use a tool like Market Profile to your benefit, and without having to put a lot of effort in top-down views, etc. You can just literally start, look at this chart, see it's a longer-term macro chart, decide where you want to play from, and then execute within the intraday, all without having to change the screen. Of course, there are lots of ways we can adjust our profile to suit our trading time frame, how we like to perceive, how we like to view things. We have cable. Again, you can see we pushed to the upside. Again, a lot of struggle here, but we have a massive gap in value. So a lot of these assets are setting up for a bullish run. even though we're seeing a lot of responsive selling in here, but you have to bear in mind that we're now revisiting prior week's value. So the market's getting a little bit challenged in terms of value perception. This is very common when we've had like a big drop and we've seen some volatility. The market starts to struggle to determine, as you can see, we've got a lot of overlap in value. Where's your value reference? And that's what the market is asking. So we can see that we haven't had a lot of build up, so there's not been too many bids holding us. So I do think that we've got to trade up and find some real sellers, or trade down and find some real buyers. But I'm still structurally bullish on the pound. I do think we should get a bit of a rally before we break to the downside. Dollar yen, structurally bullish on dollar yen, have been for some time. We are now trading sort of within inside value, as we call it, within last week's value. So what we really want to see is a balance forming to the upside, a bit of a break, and then I would think that we're going to get higher prices for sure on dollar yen. Dollar Canadian, we've traded down, we've got a massive gap in value. We're now trading that serious support level. At this stage, I would say, you want to be long. If you're looking at a longer macro picture, this is a really good play here. Good support levels, held up for quite a few weeks. We're talking several weeks. So if this level goes, then we're going to get a washout. So I look for some strength here, and then I think we go for a gap fill. That's the thing about the gaps. We always know they get filled out. So, it's an easy trade basically. Bitcoin, we've always been a bit skeptical. We did want to see lower prices. Bitcoin can be a volatile asset. There's been a lot of news about Changpeng Zhao and Binance, but to be honest, we're not buying any of it. We do believe that Binance will survive all of this FUD. The reality is that we need to look at bid prices. Where's it good? Structurally, I'm bullish on Bitcoin, put it that way. So we need to see where this goes. We did warn guys last week about the upward move. Say, look, watch out for the G period sale. The market was really struggling, and we're aware of all the offer stacking. It just didn't make sense that Bitcoin would rally from these levels. We don't see any significant buying activity here, so this is just short-term volatility. Sterling yen, structurally bullish. We've been saying this for weeks. You can see that the bid stack here, we filled the gap. It all looks good. Market's quite efficient now. We're trading to the upside. So again, we are structurally bullish on this one. We expect much higher prices in sterling yen. In fact, sterling yen is the most bullish I am on a currency pair. I think we're going to get a stellar move before we finally sell off, and even then I think we will probably keep getting more upside. So even after the dip, we're still going to go higher. So, and that's from the macro picture, right? So I've had a great analysis of the macro picture for sterling yen, so I'm fairly confident that we're looking at the upside. Again, guys, not financial advice. Do what you like. Really don't care, but just be aware. I'm not advising you guys financially. Anyway, so and then we got the Kiwi. The Kiwi, it's a tough one. We're building. To be honest, I wouldn't get long this until we can take out last week's high, and we broke a major weekly level. So again, it's reasonable to kind of stay relatively bearish. All right, so let's talk about some of the trades that we looked at this week. A lot of them were largely swing trades, and I really want to bring this in a focus. A lot of people have been trying to understand the best way to use market profile and how we can do that effectively. So again, let's say you're a swing trader, right? So let's pop on some of the trades that we looked at. Okay, so my key one here was crude oil, so I'm just going to jump straight to that, right? So again, if we look at the way we were positioned last week for crude, well, I said last week, the way we were positioned earlier this week for crude. So we're going to take a look. So these are 4-hour profiles, right? So we can see the build up here, right? So again, if we just so we can see the exact time sets. So here we go, 7th of June, which was yesterday. We can see the breakout here, right? So again, when we looked at the longer term picture with crude, we always said to you guys that we're bullish and look at all this activity. So if we pop back now to more sort of swing profiles, we can see that dip, and it looks like we're going to fill the gap. Now, if we split this profile, one of the interesting things that happened is that we got a massive rejection in H period. Now, from an execution standpoint, we were looking for a break of the prior high. Now, we can see that huge offer stack here. We traded lower, bounced around, more sellers out of the offer stack. We're breaking down. We can see that big break of the initial sellers taking out lows, right? So we can see that going down. So it became a great short opportunity for the gap. But then, and this is quite a good rally. So if we think about it, it's about, where are we? 43 cent. It's a 43 cent rally to the downside, or dip to the downside. We trade up, we get a rejection, and we start pushing back. So the moment we start to take out the late shorts, right? So we take out the highs of the late shorts. We want to get long, and realistically, if you're looking at a scalp, you want to go back to the profile high. So this profile here, the weekly and the hourly high, right? So, or the 4 hourly high, right? So that's where we want to be, right? So we've gone down, 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 break to the upside, boom, and we want to look to cover up. This had to be a short-term trade. There was no way we could have looked at this as a long-term position, because again, we get the break here. We could draw in sellers at this point. If we break this high, then our absolute high has to be value high, the most recent value high, because we're likely to get rejected within this value as an offer stack. And that's kind of where we went to, found some resistance, and then now we're selling off, right? So again, we're probably going to fill out the gap here, which is an inefficiency, and we've got to fill out this gap as well. So we might get quite a substantial dip in oil. So we've got to pay attention for that, right? So again, that was the premise around our trade, and of course P&L on the screen. And then also we had a trade on the S&P, right? So again, the S&P, interesting picture here. So if we go back and assess that trade, that was the one to the upside. So we were trading lower, right? So you can see we were going up, and then we had this build up here, and then we landed lower, and then we had this build up here. So what does that tell you? It tells you that we're bid stacking. If we can take out this high, we want to be long. And where do we want to go? We want to go to the value high, right? Because again, there's a high chance that we're going to trade out value high, and that's the end of our trade, guys, because we really don't know what's coming next. And as you can see, we hit that level, broke down, and again, you can see us take out the late longs. So again, we've gone out, liquidation, come down. Any late longs at this point are going to get taken out, and then we want to get short again. And what are we looking for, guys? We're looking for a retest of the lows, right? So that's kind of where we are with this one. So anyway, guys, I hope you enjoyed the video. Just remember to like, subscribe to the channel. Once again, for those of you watching, I would say adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?